Today, International Banker is joined by Vitor D'Agnoluzzo, Head of Technology and Financial Services, EMEA at Bain Company, to discuss artificial intelligence and banking modernisation. Very good to have you here, Vitor. Now, AI has, of course, become the main strategic technology priority for most financial institutions. From your experiences working with banks across EMEA, in which banking use cases are you seeing AI drive genuine business value and measurable returns today? And in which use cases are expectations of AI's capabilities currently running ahead of practical reality?
Very well. So the picture is quite clear. In the engineering space, software development lifecycle and product development lifecycle, defining what to do, delivering, testing, getting it to customers, the impact is very clear. And banks are already in a phase where they are scaling what was before a series of use cases or experiments. You have some in the industry that also had a lot of success with high volume processes. For example, IT operations, more internally facing, which is typically easier to implement because the risk is lower. But also in the market now, you start seeing banks launching use cases that are touching the customer. Always with care to separate the part of that process that is supported by AI and therefore needs to not be fully rule-based, to the parts that still need to be checked. For example, entitlements are still going to be checked and done by the usual systems, but the understanding of intent behind a customer query can happen with the use of agentic and AI. One example in the industry in that space is Chime, that have recently announced that 3/4 of all of the customer interactions are actually resolved by AI. Here in the UK, you have Starling also with solutions that are directly touching the customer. So this is on the positive side. On the question side, where things are not as consolidated or maybe where expectations are ahead of results, is wherever you don't really have the energy, the time to simplify the underlying process for agentic. So if you just apply agentic on top of an old process, what you get is, in the words of a CIO, a glorified RPA, robotic process automation. And so that doesn't really yield the results that you expect.
How do technology priorities differ between large multinational financial institutions, regional lenders, and challenger banks? Would you say that traditional institutions are becoming more competitive vis-à-vis digital native banks? And what advantage do traditional banks continue to hold over their fintech rivals, for the time being at least?
The two axes which I would use to split financial institutions are first the size of the financial institution, so that catches a little bit of your regional to European-wide or global bank side of it. And then the other axis is the degree of modernization that they've already achieved in their technology stack. So that catches the challenger bank versus incumbent. What I see is that on the large institution side, banks are much bolder in their choices. They have the technical capacity, and those teams are now also more productive because of AI. So they are banking on what their core is already able to do and innovating more. The smaller institutions still look at vendors as a core accelerator for their modernization journey, as opposed to the big ones. So the big ones are more into the build space. The small ones still see value in the buy space. On the second axis, how modernized is the institution, is where you find the challenger versus incumbent. But not only that, some of the incumbents are actually quite far along their journey of modernization. So they are already sitting on a modern core, sometimes a thin ledger that's on the cloud, that enables them to have an event-based architecture and respond to customer journeys in a much more dynamic way. Those banks are competing face-to-face with this newer wave of neobanks or challengers, and they have different advantages. They might not get quite as low in the cost-to-income ratio, The neobanks are sometimes displaying a 40% cost-to-income ratio. The big ones are still not quite there yet, but they also have a broader range of products, and they also have a bigger name and more customer trust, which is still very important. What you're left with are banks that are not small, they are mid-range, they might not have modernized completely yet. And those banks are now looking at AI and looking at technologies that were in question in terms of their effectiveness. For example, to what extent COBOL to Java modernization is real and can be done with AI. Now it's actually real and it's been proven. To what extent a thin ledger can deliver at scale for the likes of a Citibank or a global financial institution. Now this is also real. So those banks are emboldened in their choices for modern technology, and they see technology as a must. So modernization needs to happen, and they're making the jump now.
Now, I understand that you recently held a closed-door summit on banking modernization with representatives from, I think it was 14 global banks having participated in that. What would you say was the most significant trend voiced by those banking leaders regarding the future outlook of banking technology? And what aspect of banking technology and or digital transformation do you think industry leaders are prioritizing today?
This is the third year that we host the event. It's aimed at CIO level, head of architecture, and it's a very good opportunity to take a pulse of where the market is and where the trends are going. There are two very clear trends that I didn't see with the same level of conviction before. One is that there's no way around core modernization. So we started in 2024 discussing exclusively core modernization and ledgers. And this year it was much more about AI, but the conversation naturally went back to you do need to be on top of a core. The old thin veneer of digital on top of a legacy core just doesn't do it anymore. So that's number one. Number two is data. Getting your data right is necessary and is even more important in an AI and agentic world. You need a semantic layer that enables AI to interact with that data, and you need to use that data strategically to enable journeys, enable customer interactions, to sell the right product at the right time to your customers.
So during the Banking Modernisation Summit, which topics of discussions amongst the 14 bank representatives generated stronger consensus than you expected? And conversely, which topics generated the most disagreement and or uncertainty?
On the consensus side, it's very clear that we moved from a world where you used to invest in technology on one big program with a beginning and an end to a world in which you need always-on modernization and simplification. So what I mentioned before around the need for modernizing the core, there's also recognition that you are modernizing the core now, but those cycles are shorter and shorter. And so in a way, you're building the legacy of the future, right, as you modernize today, but you must do it. Second, consensus on data, I mentioned that. So maybe it's interesting to actually go to the second part, which is where there are disagreements, differences in opinion, or some uncertainty. Number one topic that I hear, and this is particularly relevant for European banks, is the degree to which you want to partner with a cloud provider, one of the hyperscalers, and how sovereignty plays into that. So the three biggest ones are vendors in the US. Banks in Europe don't really feel that today there is an alternative to that. They see that making one strong partner that will help you enable your workforce, train your talent, certify them, and use the technology to the fullest in an integrated way can be a huge accelerator. So some banks have chosen to go down that path. Others are saying, no, at least I need some optionality and I need to be using a couple of these hyperscalers on cloud to avoid some vendor lock-in risk. So this is one of the top elements. The other element, and this is more connected to AI itself, is to what degree do I want to enable agentic processes to make decisions? Some are in the camp of you need that very clear split between deterministic and probabilistic.
Yep.
And you will hand over the decision to a deterministic layer as soon as you get that wall. That layer will do the decision for you, and then you can continue maybe in a web chat or in a probabilistic flow after that. Others are actually experimenting more on the agentic AI-enabled side of things and building some of the harness around the LLMs, around the models, to deliver a more end-to-end process, but very much with a human in the loop still, because the level of confidence that you can actually enforce rules in that space is not where it needs to be for a financial institution.
Yeah. So regarding your own work on banking modernization, Vitor, you've highlighted, I think it's 5 critical decisions that often determine success or failure for banks. Which of those decisions is most frequently underestimated by leadership teams? And also, why do institutions struggle to achieve success from that particular decision? And what are the most significant consequences of failure?
Yeah, so this was a study we published looking at 46 banking modernizations across the world. We identified 5 key decisions that make or break the chances of success. So these are things like how you set up the delivery method between agile and waterfall, how much energy and how do you approach planning, how do you handle funding of the program, the sponsorship and whether that is tech-led, business-led, or both, and finally migration choices. I think if I look at the 5, where banks trip the most is the second one on planning. It's getting the planning right at the right level of granularity, having leaders of the organization that are senior enough, really engaged on the decisions and really pushing for simplification. One of the banks of this summit that we hosted mentioned that the target is going from 450 products to 100. So you see that the ratio is not a 20% simplification, is a lot more. That simplification means there will be trade-offs from a business perspective. There will be maybe changes in T&Cs with customers, and potentially the regulator needs to be involved as well. And so that takes time and it takes engagement with business and technology. So the proper planning, looking holistically at what needs to be done, is critical. And that's where it typically slips as well.
The minute you talked about planning, I was thinking, the question surely is, are leaders in the banking world good planners? Or do they often require good planners around them because that's not what they do?
A core modernization is typically considered every 10 years, but a bank only embarks on one roughly every 20 years. So this is not something that banks do every day, and it's really hard to get it right. Getting the right talent is critical inside the organization. For example, the best architects and people that have had experience with modernization, but also know your systems or the bank systems really deeply, is super important. And yes, a level of advice and support externally is always a feature, I think, in every successful transformation that I've seen.
As AI becomes increasingly embedded within key banking operations and processes, the importance of governance and risk management becomes much more apparent. Are banks moving quickly enough to establish sufficiently robust governance and risk management frameworks? And which governance challenge concerns you the most, and how should regulators balance innovation with risk oversight?
Short answer is not fast enough. So innovation is ahead of the governance processes that need to provide oversight and regulate them. What the temperature in the room clearly pictured is there is no scenario where you can go to the regulator and blame something on an agent. So humans are ultimately accountable for the outcome of processes that banks own. And banks are learning how to handle the additional risks or different dimensions of risk that come with the technology. That common law that is only built with experience and a lot of different cases where smart people are looking at the problem, looking at the outcomes, and coming to a conclusion on what should be the course of action and what is the trade-off between how much I can give autonomy to an agentic process versus not, is emerging as banks get more experience. And the target scenario is that this just becomes part of normal governance, but today it still requires a bit of hypercare and specialized people looking into it. And there's also quite a bit of benchmarking going in that space, with banks also learning from each other to make sure that they deploy the technology in a safe way.
Yeah, and as you mentioned earlier, getting expert advice, which is exactly what I think we've had today. So thank you very much indeed for your time and your thoughts.
My pleasure.